Hey guys, username here, and I have a trade review. I was going through some old trade reviews, some old journaling, and thought I would post one on this because it was a little bit different, a little interesting. And so what I'm going to do is I'm going to start by going through my detailed trade review and kind of walking you through that, and then we'll get to the charts and see it. Really like doing these detailed ones. They help me with repetition. It makes me look at the chart over and over again, reconfirm what I thought I was seeing, and sometimes I pick up things I didn't see when I was in the trade. But so hopefully this will help you as well with something. But so let me get started here. Trade review, small account, SPY, 0 DTE, position size less than 10% of account. That's really critical for risk management. And the reason I'm on my small account is because I'm working on process over profits right now. Profits are scalable. Process is deadly. So I need to get my process refined. And I'll probably do this every once in a while. I'll go back to the small account, refine the process, get better. You know, it's if you're not getting better, you're getting worse, right? So number of contracts on this was 1 because it's my small account, so I can only afford 1 on SPY. Trade plan, pattern break, level rejection, and candlestick pattern. Trade plan, hold with momentum to and through levels. So usually if I have 1 contract, I've got maybe one component here that's a trade plan, and I hold with momentum. Maybe it's at 10% or 15% or hold to 1 level. So this is why it's a little different, because I've got 3 things going on here, which is what allowed me to hold to and through levels with 1 contract. YouTube video, yes. Discord review, yes. So SPY, small account trade off PB levels, TA levels, and pattern break with candlestick pattern for 81% on a single contract. Setup, rejection of pre-market high, which was also creating a double top with pre-market high. Also a shooting star candle pattern on the 5-minute chart with volume confluence. Further confluence with 5-minute NQ and ES, as they were also wicking and couldn't push or hold pre-market high. Incidentally, I didn't put it on here, but VIX was also wicking and pushing up. So that was further confluence. Entry, small account, 1 contract. Entered the breakdown of the shooting star pattern, technically double shooting star. Stop loss was pre-market high. So let's look at Thinkorswim. So Thinkorswim has more detail in here in my notes. So here's the double top I was talking about with pre-market high. Now if pre-market high, you know, would have been at like 4:30 or 5 o'clock or something, there could have been a whole lot going on between then and open that would make the pre-market high not look like a double top. So this was a double top because we tested it, we kind of came down and floated, and then right after open we tested it again and we're rejecting it. So that's why I say that's a stronger double top than if it was you know, earlier on and there'd been other price action going on in between. So to me, here's the double top. To me, I also might do a rejection off pre-market high or any level. I might do a rejection off a strong level. This is a strong level, so that's a separate, you know, that's a separate trigger for me. A third trigger is off this shooting star pattern. And this is why I mentioned it might be a double shooting star, just because there's 2 candles here that both represent a shooting star. So I've basically got 3 different patterns I'm playing with this entry. My entry was at the break of the shooting star. So this really is a decent break for any of those 3 patterns. So I was super confident in this. I did not hesitate. Now, when I was a beginning trader, I had a problem with hesitation. I don't really much anymore. In fact, sometimes I get in too early. Just based on my confidence, but there was enough. So as a beginning trader, if you're a beginning trader and you see 2 or 3 different patterns playing out and you have 1 entry that covers all of those, that's a good entry for all of those, then you should be confident enough not to hesitate on pulling the trigger. So my stop loss was up here at the hold of pre-market high, and I didn't have, so this usually I would play to a level or I would scalp for 10 or 15%. I had so much going on here telling me that this was a good trade that I knew that I was going to be hanging on to this a little bit. So my trade plan never included scalping. It was always, hey man, I'm going to hold this and scalp the momentum. So the other thing in here, down here below, is the volume. The volume was also telling us we should be staying into this. So I had the opening candle with really high volume, which is normal. The second candle was a drop down. So this is a doji, which tells us nothing other than people were clearing things out. The next candle dropped down from the open, and we basically did like a tweezer bottom here. The thing that's interesting is the drop down had a lot of volume. The reversal had about half the volume as the drop, so not as much conviction there. The second candle, had increasing volume, but the third candle that went to pre-market high had decreasing volume again. So that tells me that the buyers are losing interest in that. The buyers don't have the conviction. Then the second shooting star candle had even lower volume. So again, this is telling me that they're losing interest and that this is the time to enter. So now, interestingly, let me go show you this. This was kind of like an algo move. So this was the beginning of the candle, and it shot way up and dropped way back down really quickly. So I kind of disregarded that. It shot up and came back down so quickly that to me it wasn't even a thing. So I still entered. I still entered here, just like I would have. And so here's the thing about this trade. And here's the reason why going right into it from the start, I knew that this was going to be my A-plus trade. This is what I would call an effortless trade because I was never negative. The whole time I went through this trade, I was managing my exit. I was never thinking about my stop loss. The only time I thought about my stop loss was when I kept moving it down. So this is what tells me that my entry was ideal because I was never red on this. If you see over in the contract here, now I'm over on this side. I got in after the big spike. I got in after it went down to, down to the low here. And I was never in the red here. Now, as you see here, I left a lot on the table, but I was never in the red. Effortless, completely effortless trade, that to me is the A-plus setup. So, but let me tell you why I stayed in. So normally I would scalp this, and that's what you should do if you've got one contract and you've got, take your contract to a reasonable gain or to a level if it's in that range. We had a ton of volume in this candle. I was never negative on this, and we closed below the two levels that were the most concerning when you enter in here. That's a really close level. That's probably not going to give me my 10 or 15%. This level probably would have given it to me, and I could have closed here, but we shot through it. I mean, we basically rolled right through both of these levels, closed below. We did retest a little bit, and that's the other risk, is that you come down here to the new low a day and you reject that, and you that's where you come back up and you make a run for it. We did retest. We retested to this daily emerging, the second level that we closed below, and that's it. And incidentally, when we closed below here, I was able to move my stop loss from here back to break even. We went through two levels. Really, that one's too close, but we went to two levels. We close here. I move my stop loss to break even. I'm break even at worst now. We retest a little bit, and then we go down. So we have really big candle, high volume. Decent sized candle, almost no wicking on the bottom, and lower volume, but that's okay. We just had we had the mix up here. So now we reset, and this volume was actually higher than these other candles over here. So this tells me to stay in. Next candle blows through my level. In fact, if we go to the 1 minute, these two 1 minute candles blew through that gap too. So it blew through that level, blew through that gap, all the way down to where I exited at pre-market low. So if you're looking at this and saying, hey man, why would you exit at pre-market low? You had no retests. You had big, thick red candles. Why would you exit there? So here's what I was thinking. Price action was not telling me to get out, but my gut was telling me to get out. Can't explain it, but pre-market low and daily emerging with the daily emerging just below it, kind of straying from the 9 EMA. That would be a really good place to get a bigger retrace. We'd been getting a couple of little ones here. That'd be a good place. What did we get? We got a little one. And I got out on the way down, so I never saw this wicking. But I was really expecting a pullback here. Either way, I had one contract. If I had multiple contracts, and I could have scaled out most of it by here and left a runner or two, that would have been ideal, and I would have done that. But I had one contract, and this is already at 80%. So To me, this is an ideal place to exit that contract because I was at the highest risk of getting a pullback at this point after coming down that strong. So that's why I stayed in. Even though the price action was telling me, the price action wasn't warning me until this low volume red candle here. It had a nice big body, but it was low volume. And then this one is kind of like the reversal indicator, right? And it was higher volume. So somewhere in here would have been, I had plenty of time to get out and pocket more money. But I'm actually very happy with this. I'm happy with this because it did make sense. There was a reason behind it. It wasn't just random. It wasn't me afraid. The great way to leave money on the table is when you're afraid you're, going to lose money, right? So it was for none of those reasons. The whole trade made sense the whole way through, which is, again, why I wanted to post this. It's interesting. Usually with one contract, I would have scalped it, somewhere in here maybe. Even with that strong move, I might have done it at new low a day or approaching new low a day. But, I could have walked out with 15%, but I walked out with 80%. So, and there was a reason behind it. Could I duplicate this? Yes. Yes, I could duplicate this, and that's the critical thing. So what did I learn from this? I learned that I had a really good entry. I had a lot of confluence here with volume, with different patterns. Had a really good entry in an effortless trade where I was chasing the exit the whole time. So really good lesson. I mean, I like to do this on winning trades, but it's just as important to do on a losing trade that was either warning you the whole way, and I have posted those, that was either warning you the whole way or was a really good trade setup that just went wrong. I mean, sometimes that happens where this would just bounce for whatever reason, even after all this wicking, would bounce down here and then go back and reverse on me, and I would, have to stop out. So that's what I wanted to go through. Wanted to kind of explain why a normal scalp turned into a hold, scalping with momentum, and interesting trade. That's why I like to review my past trades because I learn from them even more the second and third time I look at them. So if you have any questions, post them down below. And otherwise, you can check out my Twitter or go into the Discords and check out reviews there, or ask me questions there. You can DM me and ask questions there. So there it is. Until next time.